Good Tuesday evening, everybody. It is January 9th, 2024, here at precisealgorithmtrading.com. And let's dive right into the markets. And these are our automated trading systems. So here's the Dow futures. That's that right there. Today we pretty much walked sideways. And the trades for today were, well, they're right there. So more losers than winners, but nothing major. And if you add that up, it's maybe a little down, but pretty much sideways. So the Russell here, we got a nice little bounce in the last 2 days actually. So yesterday's trade, which we went over yesterday, was right there, and today it's up a little bit more. So, and that's for 3 contracts. So I want to make sure everybody gets that. It can be ramped up and down, but all the risk parameters still need to be handled. You have to have enough money in your account to handle the drawdowns, and uh, that's the long and short of it. The Nasdaq finally popped really nice today, and so if you look back here, these drawdowns, they tend to do this, and that's what we're hoping for here in the next few weeks. Maybe we'll get back up here to all-time highs. That would be a great thing. From this has just been sort of torture getting down here. So, and it's hard to, basically you have to sit on your hands and just take it or don't trade. And so today's trades in this particular algorithm, I'm sorry, that was 1, 8, and 9. So let's just pick 1, 9 so it's not confusing. There you go. One nice $7,500 trade on 3 contracts and a little bit of give back along the way. These two obviously offset each other. So that's a nice day, and hopefully we can have a string of days like that, or a few of them within the next few weeks. So that's the automated trading systems. Moving right along, go to stockcharts.com. I'm sorry, Thinkorswim, and let's look at this. So I was looking. This is the S&P 500, and where you're looking at the E-mini futures contract on a daily basis on the left and an hourly basis on the right. And just to be, especially for new people, effectively something has to happen on an hourly basis before it can really take place on the daily basis. The hourly makes up the daily, and the 15-minute makes up the hourly, and a minute makes up, well, there's 60 minutes in an hour, so really it's all fractal in nature. So it's like the little parts make up the big parts, and a lot of the same patterns and everything happen on all the small time frames before they happen on big time frames. So, and they roll over on the small time frames first, typically, and or at least along with the big time frames if everything just gets flushed all at once or rises all at once, like yesterday's price action was a big bullish candlestick, and a lot of buyers stepped back in there, or shorts got their faces ripped off, whichever direction that went. Bears or shorts, I kind of use those words interchangeably instead of bulls and longs. So anyway, I wanted to go look at something. So this is the S&P, and we're going to take a little diversion and go look back here. This first pop up here, we had a pop up and a pullback and another pop, and I keep talking about this pullback didn't go deep enough to really get institutional buying going. All the institutional buying apparently jumped in at the lows and just ripped it higher. So nobody could get on board unless you were unless your trading system is built that to manage that or take advantage of that. So I was going to look back and say, so do we have to really unwind all the way to the 50% level? And the answer is no, long and short of it, because the markets can do whatever they want. But I went back here on the charts to 520 right through here. When we kind of ripped higher and we didn't get those 50% pullbacks, and it never happened. And I wanted to show that because just because things kind of went to a top here and they did pull back, they didn't have to pull back so far. It's not like a rule. It doesn't have to happen. It's just you're going to get a lot more institutional buying if all of a sudden they're getting a cheaper price. So this thing you can see actually took off really kind of twice. Came up here, came down, and then went up again hard. Then it ripped back and forth a little bit, and then it continued to go on. So, and then I went ahead and did a little deeper dive and jumped into stockcharts.com, and I changed. You can change these dates down here. I never have really shown this before, but you can change this, and I put it in at 615 of 2020 to show that we were in a column of O's. And if we go to 615 on that chart, that's this dip right here. It is not that deep to have gotten into that serious of a column of O's. And then when it ripped higher, which let's take a look at it a week later by just changing this date down here, we can go to say 626 of that same year, 2020. Go down here and hit update. And you can see it actually continued to go lower as far as the bullish percent index goes. And what's that mean? That means that just fewer stocks were participating in the move, even though the move was going higher, because that's what this is. This is a measure of how many stocks are on a point and figure buy signal. And so you can read into so how many, the inverse of that is how many are left on the point and figure sell signal. And you can see that when this thing did this and it rips higher, we can go back in time, we can see how those numbers played. Generally speaking, the bullish percent indexes will give us a heads up and an edge, but you don't do anything in a vacuum. You don't do it all by itself. So I actually I'm looking at that on purpose to go find a place where we possibly could be here. I like a bull market personally, where we've pulled back here, and can this thing rip higher from here? And it can. We happen to be where our bullish percent indexes are all elevated, and we'll look at that in a minute. But so I think we still need to get some unwinding there. But I guess what I'm saying is it doesn't have to be panic selling. And it could be really interesting to see if this market can go higher. And there is a reason even to look at that, because if we flip this, not to get too deep into this or rabbit hole, but if we look at this on a weekly basis, we're just getting to 52 week highs, or I think 252 period week highs. So these are, I normally am looking at a 252 day because that's about a year. So these are yearly highs. When you're looking at a daily chart, let's flip it back there. These are daily highs, so these are yearly highs, 252 of them. And if you flip it to the weekly, it's 252 weeks. So we're looking at generally all-time highs right now, and this thing could just take off and run because of that, because we're seeing all-time highs, and really there's no resistance overhead to stop us if this thing gets taken off. So part of the reason I put the stochastics back on, and it's a little different than some of the stochastics we've looked at in the past, but it's to get a read on really overbought and oversold, and when we might want to come up out of the oversold territory and be able to take advantage of some of those types of moves, swings, if you will, in the charts. So anyway, I didn't want to go too far down the rabbit hole, but I did want to call that out It also wouldn't surprise me if we get a pullback into some kind of zone like this, kind of a bull flag pattern. I could go in here and actually, they've got drawing tools for this. Let's see if I can't just. I don't think it'll be that steep, but something like that, and then bounce out of it. So, anyways, that's all speculation. We don't really need to speculate. That's not how we trade. So, um, we trade off of signals and we manage our risk. All right, that's enough of that. But did want to give everybody kind of a different look. We have pulled back here, but again, and it's it's fairly deep, but it's not. We haven't taken out and like we're not going down and making new lows now, and we got a long way if we were going to go do that. So the markets, I guess, my point is, markets are still fairly bullish here, and we don't want to lose sight of that. And the fact that they're holding up like this might be an indication that there's a lot of strength left in the markets. And we are seeing some interesting times in the United States, which is where most of the markets are being driven from. So, especially our markets that we're looking at. So that's the Dow. It's still holding up. This is the Nasdaq. Still pretty well holding up. Uh, Full disclosure, I do have puts on this because I'm expecting to be able to take some advantage of this potential downside. If not, I'm going to take some heat. I'm already taking a little heat in that, but if this thing comes up here, and my stop is literally above this high right here, and I'm using the Qs to do the trade off of. And I generally will I'll buy puts instead of shorting stock. That's just a preference of mine. So after a number of years, that's just the way I'd prefer to do it. I can take a lot less risk. All right, and that's the general overall markets. Let's look at the oil market. Once it cooperates here, if it cooperates here, come on, there it is. You don't say. You're having a performance issue. So we got a little bit of a bounce today. I'm going to zoom in there. We got a bounce yesterday and today. I'm sorry, no. We got a bounce today after yesterday's, it looked terrible. And now we're getting a little bit of a bounce into tomorrow, but it's just getting started. So there's really nothing to, don't take that futures action that's going into tomorrow. That's totally with a grain of salt. So we do have negative action going on here on the stochastics. So basically momentum is down. It's short term anyway. And if we look at the USO exchange traded fund, this is where I've got my position. My risk is literally now, well, it went from when I got in, which was roughly here, to there. And I'm looking for a reward all the way up to here. So hopefully you can see that I'm looking for a lot more reward than I am taking a risk. All right, I'm going to wrap this thing up. That's the oil market. Let's look at gold, GLD. We got some crazy windstorms going on here, and I would really like to get off of here before all that goes down too much more. Gold market, we are still in higher highs, higher lows, and it really doesn't look like it's retreating much. Let's look at silver. Silver retreated some today, and looks like a head and shoulders pattern to me. That's why I've got my stop here. But I did have a valid entry here somewhere. I can't see it right off the top of my head right now. I guess that was it. So yeah, looking to either get stopped out here. Arguably, my stop really should be set back here. I don't think I'm going to move it though. So I'm going to just leave it where it's at and keep my risk in check. If this thing wants to take off, I'm all for it. Otherwise, I'll take the stop. That's silver, and let's flip over back to stockcharts.com and go through all of the bullish percent indexes. I'm going to retype in bullish here so we get them all. And we'll start with the industrials, which are actually up 4.35% today. That kind of goes with what I was trying to say from the beginning. There's strength in this that's showing up at a weird spot. So only minus 0.47% on the NYA. And if this thing gets up and going a little bit, we could break higher on the column of X's, which is a point and figure buy signal that we haven't seen for, well, since I'll call it June of last year. So um, the transports up 7.14% today. That's pretty strong. The NASDAQ barely changed. The SPX in a column of O's but went up by 0.81%. So some really interesting moves there. The S&P 100 up 1.32%, and the NASDAQ 100 in a column of O's and didn't move today. So yeah, watch your risk and take good trades. Make good bets. I hate to call them bets because they're based on math and probabilities, but that's really what they are. So until next time, take care, guys. Good trading and have a great night.